Why are you still so bullish? It seems to me the market is taking a bit of a breather, even though it's slightly higher in the pre-market.
Ashley, look, the market, in my opinion, looks absolutely spectacular. And all you hear from the only bearish arguments you hear against this against this market are on two levels. One is concentration in technology, and the second is valuation. And there's a lot of comparisons to the tech bubble of 1999. Well, first of all, over the last 13, 14 years, earnings for technology companies are up by a factor of 5, while the rest of the market earnings have doubled. So that's really what's driving a lot of the concentration factor. And then if you look at the PEG ratio, or profits to earnings growth, we're only at between 50 and 60% of where we were in the late 90s when we got to that technology bubble. Okay, none of the bearish arguments are, okay, the world is ending, the economy is slowing down, interest rates are going higher, inflation is out of control, when in fact, the reality is the opposite. So we have an unbelievable economic backdrop. Earnings estimates are far too low, in my opinion. And yes, valuations are high, but they can get a lot higher.
We've got about a minute, Mike. You know, you mentioned earnings. We'll start them in earnest next week with some of the big banks. With the lack of economic data out there now because of the government shutdown, do these earnings take on more importance?
Yeah, absolutely. Every data point we can get is going to move the market more now, because a lot of these economic data points we're not going to see. But I think after the fact, when the government reopens and we start seeing this, we just get a confirmation of what we already know, is that certain segments of the economy, like data centers, is going gangbusters, other ones not so much.
Very good. We'll have to leave it there. Thanks for joining us on this Friday. Mike Lee, as always. Thank you, Mike.